Hey everyone, welcome back to the Deep with Dark today. We're diving into a skill that could completely change your financial future day trading. But here's the truth. If you don't have the right foundation, this skill can become a source of stress, confusion, and major financial losses. In this video, I will walk you through a beginner-friendly roadmap to start day trading the right way without emotional breakdowns, without unnecessary tools, and most importantly, without blowing up your money. So let's get started step by step. First, let's talk about mindset. Day trading is not a get-rich-quick scheme. It requires patience, consistency, and strategic thinking. Let me give you a simple example. Imagine flipping a coin. Heads gives you $300, tails gives you $100. If you flip the coin 10 times, your average earnings could be around $11,000. The key here is not getting emotional about individual flips instead. Trust the math and stick to the process. Trading works the same way. Not every trade will be a win, but if your strategy is solid and your risk is managed, long-term profits will follow. Step 2 is using the right tools and platforms. You only need 3 core tools to get started. 1. TradingView, the go-to platform for analyzing real-time charts. 2. Google Sheets or Excel to keep a trading journal and track your results. 3. A reliable broker like Coinbase or Kraken for crypto trading. Step 3 is understanding charts and price action. You don't need a bunch of flashy indicators. Start simple. Just use candlestick charts. Every candle tells a story. It shows you the battle between buyers and sellers. When you understand that story, you begin to anticipate price movement. Then comes supply and demand zones. These are key levels where price consistently reacts. Learning to spot these zones gives you powerful entry and exit points. Step 4 is trend analysis. Learn how to draw trend lines. If price is forming higher highs and higher lows, that's an uptrend. Lower highs and lower lows, that's a downtrend. Trends show you the market's direction, and as they say, the trend is your friend. Always trade with the trend, not against it. Step 5, and it's a big one, is risk management. Every successful trader follows this golden rule. Never risk too much on a single trade. If you have a $1,000 account, risk only 1 to 2% per trade. That's $10 to $20 max. Always set a stop loss so your losses are controlled. Stop losses protect your capital and stop your emotions from taking over when a trade goes south. Step 6 is understanding leverage and accessing capital. In crypto and Forex, leverage lets you open larger trades with smaller capital, but it's a double-edged sword. It magnifies both profits and losses. Use leverage only when you fully understand your setup and have strict risk control. Otherwise, start with a demo account and practice first. Step 7 is journaling. Track every trade. Why you took it, what your entry and exit were, and the result. Journaling helps you identify patterns, spot mistakes, and improve over time. It's one of the most powerful habits a trader can build because it brings discipline and accountability to your game. Step 8 is live practice, but always start with a demo account. Before you risk real money, complete at least 50 to 100 demo trades. This builds experience, pattern recognition, and confidence. Once you're consistently profitable in demo trading, move to a real account, but start small and scale up slowly. The final step is building a growth mindset. Day trading is a long-term journey. There's always more to learn. Every loss is a lesson. Every win is a reward. The market is constantly changing, and successful traders adapt with it. If you keep learning and stay consistent, you'll separate yourself from the 90% who quit too soon. So today we covered the trader's mindset, essential tools, price action, trend lines, risk management, leverage, journaling, demo trading, and long-term growth. If you follow these steps with honesty and patience, day trading can become a serious income stream for you.